Good evening, friends. In front of you, the first future trend of new financial year, that is FY 2025. The market again started coming back to the war where it basically lost the momentum, and it did extremely well this week. If you look at small cap did well, mid cap did well, the large cap did not do as much as it should have done actually. Today RBI came out with the new monetary policy and what RBI has to say. So I'm going to cover that. Normally we don't cover future trend. In future trend we don't cover RBI monetary policy, but since it has come out, it's my duty that I should also explain you what are the takeaways from the monetary policy. But before I begin my webinar, in fact there are very interesting things lined up today in future trend. Like, which is the best month for investment in the equity market? If you look at the trend, and then it gives you an idea about in future how you should play your strategy based on that. Whether interest cost is going up, and if yes, by what percentage? It gives an idea how much it can impact the future profitability. Is India doing Capex? Where do we stand in terms of fiscal deficit versus I'm going to cover that, so let me come to that slide. But before that, let me put a disclaimer that this webinar is only to enhance your understanding about the equity market. Please consult a financial advisor before buying or selling any stock. Past performance no indicator, and investment in securities market are subject to market risk. Now, if you look at it, so there are various aspects I wanted to cover this time in terms of what is the trend that's there in the tax revenue. Someone other day asked me, the market cap GDP is high, and if more companies are going to come, so market cap will increase. So I thought, let me just look at it. What is the kind of market IPO are coming? What is their market cap? What is the amount they are raising? Deciphering India's, the depreciation cost. Copper is rising. So is the case with the crude. What does it indicate? Does it indicate anything? And timing the market, if so, which is the best one, and of course fiscal deficit versus this. So let me just go one by one. So what is driving India's tax revenue? And when I look at the data, so there are two kinds of tax revenue the government of India gets. The direct taxes, that is includes you and me paying income tax. Your company where you work is paying income tax or corporate tax. So which is very direct, that's the thing. And that's been reported by the income tax department. And there is another revenue which is called GST, which is collected by the central government and get distributed to this one. So there are two major, and of course then there are other taxes also, and I don't want to go into that. Now if you look at the income tax collection, why it is very critical to understand why income tax, because that shows disposable income or the rising income level of India and also of the corporate. Both are linked, am I right? If the company does not do well, probability is very high that that company may not pay a good hike to the employees and vice versa. If you look at it from 2022, FY 2023 and 2024, if you look at it, 15.8 lakh crore and 18.9 lakh crore. So you are comparing same date, this year versus last year. The increase is of 20%. India's GDP grew near about 10% or so. Income tax revenue grew 2x of the GDP, which is a very healthy sign. And remember, it is not that government of India has increased the income tax rate or increased the corporate tax. So in other words, people have earned more, corporate India has earned more, and because of they have earned more, they have paid tax, which is a very healthy sign. If you look at it, this data of 15.8 versus 16.6, this I'm talking about these two data, there's hardly much difference. So that's the data from 18 March to 4 by the full year, there's hardly much difference. What has really happened is that what gives me really good satisfaction is that if you look at what was the India's income tax collection, 6.4 lakh crore in FY 2024. That increased in 10 years to almost 19 lakh crore. 3x of what it was there 10 years back. And that shows robust, and in between we did have a COVID which disrupted so many things. And yet, in fact, corporate tax also got reduced, if you remember, somewhere in 2000, I think 1920, I believe. Just before the COVID, that financial year, the government of India decreased the corporate tax, or maybe in 1819, I may be going here and wrong by 12 months here and there. But yet, the growth has done, now that's a very healthy sign, Why I'm saying so healthy sign? Because that really gives an idea. And if you look at this 20%, so I'm just removing this 49% here because there was a dip in 2021 because of COVID, and that's why it increased to 14.1, which is anyway a good number, am I right? But if I remove that, 20% growth seems to be the another new high in terms of growth, because normally we were 15, 18, like this was 18%. Okay, then again we saw somewhere here in FY 2023 18%, but 20% growth looks very, very promising. That's the thing. And if you look at, despite that looks, there is a growth in the income tax collection. That's a direct tax collection. I'm getting confused. I think it's an income tax or it's a direct tax. This is a direct tax. So yeah. So if you look at this, the share of the direct tax in the total, which was 56.3, has come down to 53.3. So while on one hand our income tax has gone up, direct tax collection has gone up, but as a percentage of total GDP, total tax collection has come down. Why it has come down? Purely because of the GST robustness. So that's what has happened. So remember, it's not the indirect tax that basically gets you more money for the government. It's a direct tax that gets more money for the government, or more than 50%, more than 50%, sorry. IPO surge. Now, normally what I've observed that if there is too much buoyancy in the equity market, that's secondary market I'm talking about, the primary market has a leg effect and it also does well. When the secondary market start having some amount of a problem, it does impact the primary market, because ultimately the sentiment in the secondary market decides the amount of money primary market can collect. Even the promoters should get more convinced of getting through the subscription only when the market sentiment is good. Otherwise, what happens? Issue flops. Number one. Number two, when the sentiments are good, people are willing to pay you higher premium also, higher valuation also. That doesn't happen in the bad market. Now, someone suggested if more and more companies are going to go public, don't you think that India's market cap to GDP should improve? That's a fair argument. Okay, there was nothing wrong with that. But anyway, the company that are going public are not so big company that justify 50% growth in the market cap of the India Inc., which happened in FY 2024. If you look at it, only 87,000 crore been raised last year. That is FY 2024, 87,000 crore, as compared to previous of FY 12, 63,000 crore. And see, remember, previous years that FY 2023 was not a very great year. So, but the size of the public issues were really big. Why? Because 56, and they raised 63,000 crore. The numbers have doubled almost, but the amount is not double, which clearly shows that smaller size IPO came. What we need is a bigger size IPO. And I think that's where we need to basically, like the likes of Jio should go public, likes of Reliance Retail should go public. Ola is going public with the scooters. And I think that's where basically we need these numbers to go up. Now, for some reason, if the market sentiment in the FY 2025 is going to remain subdued, you will not see, maybe the amount, because of couple of big IPO, amount could look little bigger, but number of IPO may look little reduced. In fact, I must tell you that government really missed out opportunity of reducing stake in the PSU company, because the sentiment was extremely good not only the sentiment was good, even the sentiment on public sector enterprises were really extremely good. And yet government did not did too many IPOs. I think it should have done it. Nonetheless, I think the point is that and of course the highest amount that we raised in the recent history has been in FY 2022, where 1.3 lakh crore money was raised, and that it all does include LIC going public. Okay, so I think we need big IPO to see the graph, yellow graph going up. But otherwise, the FY 2024 was a year of a smaller size IPO, and they basically more IPO came just to ride the sentiments in the market. If you look at it, 107 IPOs, matlab what? Almost alternate day one IPO coming in. I'm talking about the working days, because Saturday, Sunday, no, none of the IPO. So almost alternate day one IPO open in FY 2024. That's a really good, very big number. But amount wise, it's 87,000 crore. It's not very substantial number. I would really would like to see this number going to 2 lakh crore kind of a stuff, which will happen in next 4-5 years, no doubt about it. And that's where we can really see the IPO market coming to its real potential. Okay, is it the Capex cycle coming back? And I think that's a one question that has been bothering many experts. And what we have done is that we have taken all the company, of course we have removed banks, NBFCs, insurance, and look at the cash flow. And based on the cash flow, they would have mentioned how much amount they invested in the investment activities. And we have taken summation of that. Thus gives an indication that the amount being spent by the India Inc. is on the rise. 5.2 lakh crore, which increased to 6 lakh crore, which further increased to 7.3 lakh crore. 23% growth. Okay. One good thing which has also come out in today's RBI monetary policy is that they give a data which says that capacity utilization in the manufacturing sector is at 74.7% for quarter ended December 2023, which was 74% in the previous quarter. So what is happening, that 74.7% thus gives a hope that we should see private capex moving up. Of course, it's going to not happen from the traditional sector. It can happen from some of the new age sector, whether it could be green hydrogen energy, EV, solar, chips not the khane ka chips, okay, and this so and so forth. So that thing that's going to drive the capex for the India Inc. But somehow there is a strong case that capex should increase for India Inc. And when the capex happens, what is happening with the borrowing cost? Because ultimately, many times you basically borrow money to fund the capex. So if you look at it, India's interest cost is gone up by 16%. Sorry. Okay, yeah, this has gone up by 16% in the first 9 months of the. So when I'm comparing first 9 months of FY 2024 versus first 9 months of FY 2000, it's gone up by 16%, which is a very. There are two reasons why it has happened. One is that definitely some amount of capex interest cost has been little higher as compared to what it was there in a full 9 months of FY 2023. And number three, some amount getting stuck in the working capital. Rising copper, and if you look at the copper price, and people say that copper price basically signifies what? So you look at this copper price, from 1.62, which was there here, it's gone to 1.92. Okay, almost 25% jump that we have seen in the price of copper. And if you look at it even 12 months, it's at 1252-week high. Now, what does this copper, I'm helping you to understand, whenever the copper price goes up, it shows amount of activity happening in the world. If it goes up, that means higher. If it goes down, it's lower. Because copper is a commercial, it's a commodity which used in the industry. So this increase in the copper price suggesting is that demand for the copper is on the rise. And that really makes us believe that the things are improving for the copper. And that means the economic activity is on the rise. If you look at the first, let's say for the March 2023, the global PMI is at 9 months high, which shows the level of activity within the global activities is on the rise. Crude oil prices have also gone up substantially. Since December, it's almost up by 20% or so. So that's further gone up. This one. Just Amil, just close my this one now. PPT, please. Just put me on this one because I think there is some different slide I'm opening because I made some data changes, but it seems that it's not been saved. So I need to just go back where this data has gone actually. So just 1 minute. Yes. So, yeah. Can you just see my screen? Yeah. So if you look at this data, the PMI has gone to 9 months high, to 52.3. Is it visible? Yeah. From 52.1. So there's globally things are improving, and that's reflecting in the copper. So simple logic. If copper price goes up, that means world economy is doing very healthy. And I'll come to that also, why it is very important to know that. Everyone is expecting the Fed to cut rate. If the things are so strong, there is a little urgency for the Fed to cut the rate. Yesterday, one of the Fed official made a statement that there is a fair possibility that there may not be a rate cut in 2024. So, a scenario where we were expecting 7 rate cut to happen, now we are talking about maybe not be a single rate cut in 2024. And I think copper, so if the copper price remain where it is or it's further moves up, it's going to further decrease the chance of interest rate to come down. If you look at the crude oil price, which I was talking about, is gone up by 20%. It's likely to further move up. Why is it likely to move up? Because the production cut announced by OPEC Plus will continue in the second quarter. At the same time, demand for crude is going to go up. That's what IEA, International Energy Association or agency, has predicted that. And if that's going to happen, and the kind of PMI data that shows, I think crude price can go up. I would not be surprised if crude crosses $100 per barrel in next 3 to 4 months. Now that's all means inflation is going to remain a little sticky than what everyone thinks so, believes so. Now, which is the best month to invest in? Okay, that's a very interesting. And what you see, the graph in the blue color, so July is the best month. You know why? Oh God, sorry. The July is the best month. Why I'm saying so? Because if you look at it, the July, out of 15 years that we have taken the Nifty 50 returns, 11 times it has given positive returns. In other words, if you invest in the month of July, when I say July, not maybe on the 1st July, okay, let me put it this way, probability of you making money by end of July would be high. And then there is some amount of tie between in the month of March, in the month of October, and in month of December. But when you look at the returns actually, okay, so remember, just jot down the data of April and May. Why? Because they are 9 times they go up and 6 times they went down. But when you look at the returns, when they move up, I think the probability of moving up in the month of April and May is the highest. That the amount of return this gives is the highest in the month of April and May, 3% each. February is not a great month for the investors to make money because on an average it has given -1% return. In January, zero, no returns. In August, no. So, if you wish to expect returns in the month of Jan, Feb, and the August, probability is very low. On an average, it will not give meaningful returns. But April and May, we are in the month of April, am I right? So if you look at April and May, they have given on an average 3% returns. And when you look at the probability of they giving positive returns is also high. They are 9 each. It's not bad that much, okay? So 2/3 possibility of the Nifty 50 going up in the month of April and May. And if they do go up, on average returns are 3. That average returns includes the negative returns that has been reported. So I think if you ask me very frankly, April and May normally is a good month to invest. Why? Because probability of Nifty 50 giving positive returns is high. Number one. Number two, the average return that you can make because of by investing in April and May is also high. Someone had asked me about this India's fiscal deficit and also India's external debt to GDP. So I thought it's my duty to explain you. So if you look at it, India's fiscal deficit GDP for FY 2024, because it's a projection that is 5.9. For other countries, we have taken 3. So Italy is 7.2, China is 6.7, US is 6.2, India is at 5.9. We have aimed to reach at 5.1% this financial year, the year which has started, and 4.5% in FY 2026. So is India's fiscal deficit is out of the heck which compared to the US or China? The answer is no. Is there a scope of improvement? Of course, there is a huge scope of improvement. Ideally, India's GDP, fiscal deficit GDP should be 3%. That's what the aim that we would have had a few years before the COVID hit us very badly. So ideally, we should be, in par with what Germany is there, and that's the way it should be. So I think the glide path for fiscal deficit is downward. Are we in a most what we call, and this of course we have compared with some of the developed, some of the leading economies only. There are many other economies who have worse fiscal deficit to GDP, but there is no point comparing with them because then you look really good if you compare with the very bad. So what we decided to compare with some of the leading developed economies to give you. So is India's fiscal deficit to GDP is out of the heck? No. No. Answer is no. It's not. Number one. Number two, India's fiscal, the external debt to GDP is only at 18.7% as of December 2023. In other words, we are funding this fiscal deficit purely through the domestic borrowings. So we don't run in a risk of a default or so on and so forth, or could create a problem for us. Why? Because our fiscal borrowing as a percent of GDP is only 18.7%. It's not very high. And I think that's a very good. Total debt to GDP would be near about 80 or something, if my memory serves me right. And with that means mostly our debt has been funded by us. That is by us, matlab you and me, not from the external. As long as we have been funded by domestic, it's a good sign. If it has been borrowed from outside and then it just creates a lot of problem, it also creates a problem in terms of currency also. So there is no danger sign because someone had asked me that question. It's my duty that I should put it. Now very quickly, I know RBI has come out with today's monetary policy. So let me touch upon that. So RBI kept the interest rate same as it is. We were expecting it to come down. Why? Purely because not for the economic reason, but I thought the government would like the sentiment to be good, and RBI might oblige with that good sentiment before the election. But RBI decided to kept it unchanged for the very simple reason. I think, of course, one member, Jayant Verma, did ask for the rate cut of 25 bips, but the majority members basically were against it. And one of the reasons is very simple, is that I think there is uncertainty on the food inflation. The geopolitical situation could result into a supply side disruption. And number three, there is a little less clarity as we speak on the monsoon. And I think RBI decided not to go a little ahead of the cow and cut the interest rate. my sense is that since it has not happened, there was a reason to happen this time because we are thinking that to create that feel good factor amongst the before the election. But I think the wait can become a little longer now for the rate cut. Why? Because crude oil prices have started moving up, copper prices started going up. It could create more pressure on the inflation. Inflation trajectory may remain little upward. See, RBI has basically maintained 4.5%, the same inflation that they were expecting in the month of Feb. So they have not revised it upward or downward or the inflation. I'm a little surprised for the very simple reason. Why? Because crude is going up, other food prices have started moving up, and copper is moving up. So this would have some kind of an cascading impact. But RBI decided. Our reserves continue to remain very, very healthy. 645.6 billion reserves, forex reserves, and GDP is expected to be at 7% for the FY 2025. That is this financial year. These are the numbers, just a summary, the breakup, what was of the GDP, 7%, what was expected on 8th Feb, what has happened. So it has come down for the first quarter, but moved up for the another next quarter, and it's almost remained the same for the next 2 quarters. Inflation also, RBI believes that the Q1, that is April to June and July to September, the inflation is likely to remain little low as compared to what they were expecting in the month of Feb. But overall 4.5% inflation, which is still higher about the comfort level of RBI. That means that we may not see a very aggressive rate cuts from the RBI. Something similar we are expecting also from FOMC. I think why? Because the picture looks little different as we speak on the inflation front. With this, let's open the floor for question answer. Bhavik and Sushil is saying mid cap and small caps are surging. Do you think still we have to stay away or can we enter? Bhavik and Sushil, my request would be, we do believe there is a froth in the mid and small cap. It has not gone away. It's just that they've fallen substantially, so they are making a little comeback. Will they be able to sustain at this level? Our sense is no. In our PMS, we have continued to remain invested in a large cap. And despite having remained invested in large cap, we have outperformed in the month of April. So we don't, despite we have not, don't have small cap in our portfolio, yet we have been able to outperform. So what we have, right now, our philosophy is move to large cap, move to good quality large cap, which has a potential to give you returns. And that's exactly what we want to do there, because we want to protect the downside, but want to ride the upside. So that's what we are doing. We still believe more pain is there for the mid and small cap. Mr. Puntamkar is saying, please explain the prospect of power generation, power distribution, coal, hydro, electric company stock in Niyam. There is an assumption of shortage of power supply in coming months, which can affect the other industries also. Your opinion, please. So the demand for power is going to remain very, very high. There is a IMD has come out with the heat wave prediction in many parts of the country. And normally we have observed that during summertime, demand for the power goes up. Why? Because a lot of people will start using ACs and so on and so forth. So that's the thing. But will there be a shortage of power? I'm not very sure, sir. I think there will be a demand, only there will be a supply of power. The only thing that you should be able to pay for it. So the power मिलेगा, लेकिन आपका price जो है, that can go up. So that will happen. But otherwise, I don't think there will be no power unless state government does not have money to pay. That's a different story. I don't want to name few states, but the situation in few states are very, very not so great. Why? Because they've started distributing free power. So when you have a free power, but the power cost goes up, what do? In fact, someone told me that one state, the total revenue 70 to 80% just go to meet the power cost. तो खर्चा करेगा किधर दूसरा? Where will the development would be? So I think this free culture is also creating a lot of problem, and sometimes when you give free, people try to spend more than what they're supposed to. अगर मैं आपको खाना फ्री में दे दूंगा, like if you look at the buffet, many times the food goes wastage. भाई वो तो लेना है अपने हाथ से, आप ज़्यादा ही ले लोगे. जो कुछ मुफ्त में मिल रही है, then you don't value for it, and there will be a lot of wastage that happens. वो पंखा चालू है तो चालू है, AC चालू है तो चालू है, रूम में कोई नहीं है. That's what I mean wastage, you know. So that's a problem, but then that's the reality of the life. And since we are in the election year or election month, you would see more demand and more manifesto coming in कि ये मैं मुफ्त में दे दूंगा, वो मुफ्त में दे दूंगा. This मुफ्त का culture is going to create a lot of problem for this country. You know, sometimes it looks really good, but someone else is paying, and some beyond a point that someone else will say, why should I pay when I'm not getting a benefit of that? So I think somewhere we need to all understand that free culture need to come. Coming back to your this, yes, I don't think there will be a shortage of power, but the power cost will go up, that's for sure. And will that affect the other industries? Yes, it will affect, because you are supposed to buy the power at the higher cost, otherwise you can't keep the factory shut, am I right? So that they will need to pass on that cost, and if they're going to pass on that cost, it could further give fillip to the inflation. So in a way, it does creates a possibility of higher inflation, not only because of higher crude and higher copper or other this one, but also because of the higher power cost. I think we believe that it's little challenging situation for the. In fact, there is one of the things which we must all be cognizant of, that water shortage is there, and if the water shortage, sometimes the government always give preference to the residential as compared to the industrial. And if that's going to happen, then industry can affect, their production can get an impact because of that. Sanjay Gupta, model portfolio personal show daily gains and total gains respectively. It will be helpful if you can show alpha generated over BSE 500 index. Okay, I'll ask. Remember, in model portfolio and personal portfolios, the benchmark is not BSE 500. Why? Because each model portfolio has a different construct. So, for example, if you go for conservative, then BSE 500 may not be right, but definitely your point taken, based on the construct of the portfolio, can you show the benchmark index so that you can understand the alpha? That's a good point, Sanjay ji. Amir, mujhe bhijwa do. I'll speak to Karan, because Karan is the right person to take this forward. या करण को भिजवा दो ना ये. Nilesh, dear sir, I want to understand from you that the tax income is increasing, tolls rate increasing. After GST, all costs kept going up, even though the India's debt is also growing. It is more confusing when the fact commitments are being heard from the leaders. Your comments on this. So, sir, I don't know what your question is actually, because tax income is increasing, tolls are increasing. After GST, all costs keep going up. Even India's debt is also increasing. It is more confusing when fact comments are. Sir, I'm not. What is your question, sir? I'm not able to understand. If you can rephrase it, that really will help me to understand. And when you say fact commitments, we are dealing with which fact comments we are referring to. I don't know, sir. I think you need to little elaborate on that, sir. Help me to answer this. या उनका सवाल वापस ले लेना अगर if he puts it, हाँ, I mean. Mahesh Kulkarni is saying, sir, can you please explain direct and indirect taxes? So direct taxes, the personal income tax, corporate tax, and so on, so which is directly you are paying. Indirect is something like GST. अभी आप, what is indirect, which आप directly pay नहीं करते हो, but actually you are paying, but you don't realize. I'm giving a simple example. You go to your kirana stores and you happen to buy a sabun or a toothpaste or a toothbrush or a hair oil or a shampoo. You know you pay tax on that. आप तो या biscuits या bread, आपने वो MRP देख लिया, आपने पैसा दे दिया. Am I right? But that MRP does include tax. That is called indirect tax. वो टैक्स आप पे कर रहे हो लेकिन आपको पता नहीं चल रहा आप कितना पे कर रहे हो. While in direct tax is something which you actually pay. जैसे आपकी सैलरी है या आपका बिजनेस इनकम है, you paid a tax, you know what tax you paid. So if you buy white goods, you do pay GST on that. वो आपको दुकानदार क्या बोलेगा, सर ये 50,000 का एसी है. इज नॉट गोइंग टू से कि 34,000 है प्लस जीएसटी इतना है. आई एम जस्ट गिविंग एन एग्जांपल. सो दैट इज indirect tax. So GST is indirect tax. Direct tax is basically you and me pay directly to the government. Amit Sena, hello Sunil, thanks for amazing webinar. Today I was attending a pre-IPO AIF webinar where they were mentioning the returns are the last one to make good money in the life cycle of a company and maximum money is made in the journey of pre-IPO till IPO. I have two questions. What is your opinion on this point, and why isn't market is in this space? Isn't market in this space of AIF? We will go, sir. AIF. It's not that we will not go. We will always take a step based on the need and based on what we can chew. You know, we need to have a resources. We need to have a network. Not the network, but the net worth. We need to have a lot of processes in place to go for AIF. Whether we'll go, most probably answer is yes. Now let me handle the first part. You know, they were saying the retailers are the last one to make good money in the IPO market. I think I doubt that's a statement. You know, had that been the case, you would not have seen the post-IPO company offering 300% and 400% returns to the investors. So I don't agree with that. Yes, there are many cases where we have seen. See, the problem, you know, is that a lot of people do invest in some of this pre-IPO stage. Those who are successful, they come out with an IPO. So there is something called survivorship bias. बहुत सारी कंपनी IPO लेके नहीं आ पाती है. If you look at some of these companies' valuations, they've been taken a huge markdown. I'll give you one classical example, Baiju. Baiju would have come out with a public issue. But some reason, you know, the valuation taken a huge beating. Huge amount would have been lost in that. Isn't it? So, you know, but then only those companies that are successful, they come out with an IPO and they make. But it's not necessary that post-IPO you don't make money. That's otherwise the IPO market survive ही नहीं होता. Because ultimately you make money that gives you confidence to invest in another next IPO and so forth. That's how the cycle works, am I right? So I don't agree. Maybe true in some cases, but not in all cases. And if you look at some of the, in fact I did one, in Future 10 only, I did analysis. Should you exit the company on the day of listing or you should hold on? And if you go back to that presentation there, I mentioned that clearly. If you don't exit on the day of listing, but you exit and you keep the shares with you, there is a high probability you will still make money. तो ये थोड़ा theory मुझे समझ में नहीं. I think maybe someone would have vested interest to, you know, for you to invest in AIF market so that they can have a customer like you and they can. So I will take this data with a tons of salt. Nilesh, if income of government is increasing from all possible sources, tax, GST, toll, etc., then why loan on India is increasing? Fiscal deficit is not decreasing. Isn't it contradictory? So, see, we need to understand what is deficit. When does the deficit increase? So, your income is rising. But if your expenses are rising more than the income, so what happens? Your deficit will increase or contract? It will increase. But if your incomes are increasing, your expenses are also increasing, but not at the same pace that your incomes are increasing, then your fiscal deficit, your deficit will come down. So that's exactly what the government is saying, that we had 5.9 fiscal deficit. Okay, we want to bring it down to 4.5 by 2006, and that's what the government said. What that one going to say? On one hand, our income will go up, but our expenses will not go up at the same pace, and due to that, the fiscal deficit will come down. That's what the government is saying. So 5.9 for FY 2024. 5.1 for FY 2025 and 4.5. Ideally, we should be at 3%. And that could always be possible. See, government will have to spend some money, whether it's a defense, whether it's a pension, whether it's a serving the interest cost, subsidies, Manrega ho, ya fertilizer subsidy ho, which are necessarily. But that has to be done actually, because that's a which basically, so that's why you see that. So deficit is a function of not only the growth in the income, is also a function of growth in the expense. That's what explains the deficit, sir. I hope I answered your question. So why it is contradictory? It's not contradictory. Only thing, and in fact, on the contrary, our fiscal deficit are coming down now. So we had a very bad COVID, and that did increase our fiscal deficit. But 5.9 is coming to now 5.1 this year, this financial year, and it will further come down to 4.5. See, there's one thing which I was discussing with someone. There are certain sections in this country who are misusing the advantage, the government rebate. Now, there are many farmers who earn in crores. They don't pay any income tax on that because farmer incomes are exempted. They also get the benefit of fertilizer subsidy. They also get the benefit of power, maybe at no cost or the subsidized rate. I don't understand why. I do understand you don't charge poor farmers. You don't charge those who really need that help. But does it make a sense that you don't charge, you don't pay, ask them to pay income tax also on the higher income, and then also you offer subsidy? Today, I don't get any subsidized ration, am I right, on my rationing card. Why? Because you have a certain threshold limit. So I'm not getting that benefit of subsidy. But the rich farmer can still get the benefit. So it's a little controversial. But this is where the thing, so I think somewhere we need to reduce. Now, who is paying that bill? You and me. The rich farmer bill is paid by you and me. Why? Because we are paying income tax diligently. But that's the fact of life. So now this is more little controversial. I don't want to go into that, but that's this way. So somewhere we need to really understand how can we basically reduce our expenses so that fiscal deficit can be further reduced. So when that income goes, it can be spent more productive manner so that it can further give fillip to the economy. Mayur, so they love your insight and forecast. Thanks a ton. Kindly advise gold and oil company said outlook, please. So as I told you, gold, if you go back to our equity outlook 2024, we did mention that gold and silver should move up in double digits, should give returns in double digit. And we maintained that someone had asked me one before last or something that the gold price have gone up, silver price has not gone up. So I don't take it on a daily basis, but I had mentioned that at a point of time that silver price should go up logically. And I've been informed that it has gone up. Oil company, the oil, as I was mentioning, it has a great probability to cross $100 per barrel. Now you can make your own calculation, but we do believe that gold can further move up from this level, and so is the case with oil from this level. Virit Khera, it seems our IP is unable to differentiate between panic sell and weak performing results in model portfolio. The reason I say this is because all the small and mid cap companies sold from my IP have bounced back to the higher levels. I noticed that major play of company getting out of model portfolio is weak technicals turning into mildly builds or bearish. And I would request you to view that IP again. Point taken, Vinit sir. The model portfolio IP, I'll ask my colleague Karan to basically look into that, and he will come back to you. What we do in our PMS, sir, we have a different IP altogether. So in PMS also we don't have a small cap. But I must tell you that despite not having small cap, we did extremely well in last 1 week. Right? All our PMS customers can vouch for that. So we did extremely well despite not having. So sometimes it's not only the company that it's only the company that basically matters what you have in the portfolio, not the market cap. One point taken. I'll ask Karan to basically look into this. Just the Karan को एक ये message भिजवा दीजिए please if you don't mind. GK Bhatt, the data you provide in your webinar is nowhere else we can get this. It enhances our knowledge and ability to analyze. Thank you very much. Thanks a lot, sir. So Bhatt sir, this data what we gave you in front of you, it's all available in public domain. हम लोग कोई data करते, we just look at the right data and we analyze those right data in a right manner. If you remember, right, and then jokingly that Mohit was also, then we said that price of onion will go up. And onion price did go up after that, if you remember. So what we do, we look at the data, we try to make sense of the data, we come in front of you and we tell you this is what we believe is going to happen. It's very simple. So all the data are available in the public domain. It's not that we have manufactured it. So if you look at this data on this, external data, just one. Amit, can you please show my slide? So this data of external debt to GDP 18.7%. If you read today's RBI monetary policy, the speech of RBI governor, it is there in the speech of the RBI governor. It's not that we have basically. If you look at this 5.1 and 4.5, is there the data available in the budget speech of Ms. Nirmala Sitharaman when she made the interim budget. If you look at some of the data, for example, Global Composite Purchasing Manager Index. It's available again in the today's RBI governor speech policy. So what we do, we connect the dots between the different data, and then connecting the data, we come in front of you and basically tell you what does this data means. So you should never look at the data in isolation. You should look at always the data with other data available which are relevant to that, and then make a sense of that. Why am I saying crude oil price can go up above $100? Not because the price ऊपर जाए इसके लिए, but the PMI data, that is global composite PMI, is showing lot of strength. That means there is going to be demand for that. Then we basically put IEA data, that what are they saying the demand for the crude, and at the same time we look at what is OPEC is saying, and based on this, when we combine all these parameters and we put it, then we come to conclusion that yes, it does give an impression that price of crude can go up. So we combine lot of data, relevant data, make sense of that, and we come in front of you. Rajan Search is saying it is more than 6 months now that we are in PMS group. Can you kindly let us know what is the total AUM and number of total PMS clients besides the investment ratio in terms of micro cap, small cap, medium cap, big caps? Our data is public knowledge, having been reported to SEBI by your periodical enhanced. This should not be a problem to tell PMS investors on the same. Rajan sir, it's all available the PMS, the SEBI website. We are right. We disclose that data on the PMS website, the SEBI website. You will get it from that. So I don't have to come in front of you and disclose that. It's all available in public domain. Please check it from there. What is not available in the public domain is our market cap exposure. So since if you are a PMS customer, every first month of the day, first Thursday of the month, I come in front of all PMS customers and tell you what is our sector exposure in each scheme, what is our market cap exposure. So for benefit of everyone, we don't have any single micro cap in our PMS. We don't have any single rupee exposure in our small cap. We have only 13% exposure in mid cap and 87% exposure in the large cap as of 31st March 2024. Rest all data is available on the SEBI website, which is in public, doesn't have to pay anything. It's open for everyone. Yes, market data is not available. I've shared that data with you, sir. It gives me impression, sir, that you are not a PMS customer, because had you been a PMS customer, you would know that what is our market cap exposure. Shyam Sundar sir, are there any sectors where valuation concerns get moderated? Looks like for the time being, nothing seems to be stopping inflow from retail investors. You are right, sir. That's how the retail investors behave. They have behaved the same way in the past. They are behaving the similar fashion, and they will in future also behave the similar fashion. Which sectors looks valuations concerns got this one? So I don't know whether the sectors. That's a very interesting question. That's also, and let me also think about it. Which sectors as of now looks little this one. I think one definitely seems to be the banking and the NBFC space. I think that sector seems to be a little should find little difficult from this level purely because of deposit growth would be little patchy, and that could result into lower NIM names, that is net interest margin, and RBI also tightening the screws in terms of how much you can lend, to whom you can lend, and so on and so forth. So that these two sectors looks to be little right now a concern. But of course, real estate looks little concerns as we speak. It did extremely well. Of course, I must tell you and I admit that I was not expecting it to do well, but it did extremely well in FY 2024. Can it repeat the similar kind of performance in FY 2025? I doubt. But when there is a risk-on strategy, sector like realty will always do well. We don't believe that that there will be a risk-on strategy going forward, and that's another reason we believe that the real estate sector may see some amount of headwinds. So that's it. What was the second part of the question, Amir? Sorry, if I can go back to that. Yeah, sorry, I've covered both the points. Thanks a lot, Shyam Sundar. Vikram Singh, what percent of portfolio we should invest in month of April, May, June? Should it be 100% 30? Sir. Vikram sir, this is not the right way to investment. Okay. This data, the reason we presented this data is not to basically decide कौन से महीनों में सब पैसा डालना है नहीं डालना है. See, first thing, you should never try to, if you have the money, so it just, you can say, December, January is not a great month to invest. So what you should do, then start investing in the month of Feb and March. That's what it basically says in mota. It doesn't say that you need to 100%, you have to wait, आपके पास पैसा, you should always invest one third in this kind of a month, April, May and June. No, we are not saying that. What matters ultimately is that how much you remain committed to that in equity as an assets class over a longer period of time. Because over a longer period of time, it's hardly make much of a difference in terms of it will make maybe 100 bips, 100 bips, 150 bips difference in terms of your overall returns, in terms of CAG I'm talking about, this one. This data is just for the understanding, it's more of an academic purpose. Nothing to basically, that may, March में पैसा डालूंगा and I will not invest or I will not put money only in the month of May and so on and so on. We are no way indicating that. We are just giving you more of an academic purpose, which month has given historically best returns. And if you are very close to that period, might as well put the money. As I was saying, April may turn out to be a very good month in terms of the average returns. Since we are in the month of April and May, we are in the month of April, I thought let me put this data. That means, it's also a function of your expectation. So suppose you've already invested in the market, am I right? So which month you should expect good returns, which month you should not expect good returns. It also helps you mentally so that you can basically fine tune. There is a very famous saying in the market which doesn't work nowadays, that sell in May and come back in the October. Am I right? Now it doesn't work, but it would to expect more returns in the month of December and January, the probability is low. So you should not expect. Should you expect good returns in the month of April and May? The answer is yes. So it's not only a function of your investment, it's also a function of what expectation you should have in the particular month in terms of return. That's what we basically wanted to convey the message. Samir Joshi, if oil moves up, would next few quarters would be negative for OMC? Likewise, would upstream see a boost? Logically, yes. If you ask me, I don't see a logic of government reducing the price of petrol and diesel by rupees 2 per liter in the month of March. Of course, we were expecting it that happen. But normally you don't decrease the price when the crude is going up. You normally decrease when the crude is coming down, but that has been done. So what we are saying is negative for OMC? Probably yes. That's what my understanding is. And is it good for the upstream? Definitely yes. Samir Joshi, what is the end March AUM for PMS? How much promoters have invested in PMS? Is there skin the PMS gap of Mohit and Joyson? I'll give you data which is not available in public domain. What is the end March AUM for PMS? It's available SEBI website. So sorry, it's not available in the PMS website. It will be made available next couple of days. So you can go to the SEBI website. This. How much promoters have invested in PMS? Is there skin in the PMS game of Mohit and Joyson? So let me give you answer. Mohit complete family has invested in the PMS. When I say complete family, that means his wife, both the kids. Joyson and his wife, Lena, they are also invested in PMS. Our company money, that's our treasury, that is also invested in the PMS. So skin in the game is very much there, sir. Not only at the corporate level, but also by both the founders. Mahabir Mathur, want to invest to your PMS, please call. Definitely, sir. Please share your details. I'll ask my team to reach out to you and they will explain you, sir. So with this, I'm really saying that it's 8, time to wind up the webinar. So thanks a lot everyone taking time out and attending this webinar. Have a great weekend. Enjoy your weekend. See you next, I think Monday. I think Karan is there going, am I right? And Monday Karan is there with the new entrance to the Mojo stock, or maybe Mojo 1. And Tuesday I'm in front of you again with Q&A with Sunil Damania. For some reason, if you are not able to take up your question dear, please do come on Tuesday and please ask your question. I'll be more than happy to answer that. With this, take care. Good night.